and just 70,000 Rand wasn't enough. As a youngster, you don't have a gauge on, what finances mean on a screen. It's just numbers. Going through that and then still not really seeing consistent profitability for 4 or 5 years. And you probably ask me, well, why would you stick with something? I don't think any sane person would stick with something that isn't working for 4 or 5 years. For someone that didn't have a job, I knew what 70,000 Rand is worth to families. That's 2-3 months of salary. So to drop that as a youngster was definitely quite heartbreaking. So it just shows you trading is very much a self-performance game, but it's done definitely as a team. Build a journal because you can't improve what you don't measure. A lot of people think like, what do you do to make money? But it's also about what you don't do.
Yo, what's up, guys? It's somebody from Top Trader South Africa, and I'm bringing you guys another installment of Malcolm Masters. Still in Cape Town, still doing the Cape Town tour, still shooting with Cape Town traders, and it's been such a joy so far, thus far. And today I'm bringing another Cape Town trader, bro called by the name Zack Rens.
Thank you for having me, bro.
No, it's a pleasure having you. Thank you so much. I'm so excited for today.
Me too.
As I was preparing for this interview, I think I was just looking at the journey and like watching a lot of your videos, especially on the gram as well. And I can tell that, there's a lot of, that goes into that, like a lot of knowledge that we're going to get out of today's conversation.
Sure.
I'm looking forward to that, But obviously before that, bro, who talks so much on Instagram and shares so much knowledge, we just want to know before the trading, before that, like who's Zack Rens, where did Zack Rens grow up as well, If you can just give a little bit of a background.
Yeah, sure. Well, thanks for having me. I think being on Top Trader has been definitely a blessing. I watched a lot of your guys' videos.
Appreciate.
From some time ago. So, sitting in this chair is definitely like a milestone for myself.
Appreciate.
As for myself, didn't have the perfect trader, story like most guys, not like the 19-year-old millionaires from the US or whatever.
Yeah.
Definitely a lot of hardship and a lot of hard work going into it. So I think starting right from the beginning, I'm the only child. Mm-hmm. And I think that was definitely a foundation for me to kind of become more independent and obviously figure out my way through life, and being younger, starting out in the finance game. As for myself, always had the business mindset, which I noticed the dynamic between relationships, especially between family members, seeing how money changes the effects of a relationship, how money controlled the dynamics of relationships in family and friends, whatever the case might be. So from a young age, I kind of gauged an introspective idea of how money is the root and the foundation for all civilization at the moment. So kind of gauged an idea from that from a young age. And then I must have been like 14, 15, where I started getting an idea of, how to make money. So, I think the first ever business idea was, I was still at home the one day and I told myself I was watching these YouTube videos on real estate and how to make money online, whatever the case might be. So I walked into the garage and I was just looking for something to sell, you know what I mean? And I remember my dad still came back from Thailand, he was buying and importing products from Thailand. And I remember looking at these tie pins, like pins that you would put on your tie. And I had a look at these and I was like, this is so valuable. I'm a prefect at school and, if I start rocking these ties at school, I'm sure they could build up a demand. So I took them to school and I probably sold like 20 of them within the first day. I think it was like 20 or 30 bucks a pop. And definitely a big demand. And I remember going home, fetching the rest of them, coming back to school. And
on the same day or the next day?
The next day came back. I came with a whole lot of tie pins to school and... I was like that kid in the bathroom, like selling off tie pins, to the guys. And next minute, like 70% of the dudes at Milnerton High were like wearing these tie pins. So we still had like a hearing from, the principal, Mr. Besn. I remember he was very for it. He was like, this looks good. Maybe we can get it approved by the council or whatever. But down that stage, I already had sold everything. So I think I made like a couple thousand rand. But that is like my intro into business.
All right, traders, let's talk about something that actually rewards you for trading. Not just the markets, but real, tangible rewards. Octa's Trade and Win program just dropped in South Africa, and it's basically a rewards vault that opens up every time you trade one standard lot. Here's how it works, and it's really simple. You trade one lot, which equals one prize lot. Any instrument, any closed position, the more you trade, the more prizes you collect. You're stacking these prize lots to unlock digital rewards like Uber Eats coupons, airtime, airport lounge access for your next trip, and even take a lot vouchers. It's not luck. It's not some random spin to win gimmick. You trade, you earn. That's simple. You can find all of this under the Trade and Win tab in the Octa app. Once you pick your gift, it lands within your hands within 5 working days. No delays, no expiry if you keep trading. If you're already trading, why not earn on top of that? It's that simple. Start collecting your prize lots today. Trade and win with Octa.
And then I remember one day I had a very good friend that was sitting on the beach, must have been like 16, 17. And we were just discussing like how to make money and what we need to do with our lives. And he also had like kind of a rough upbringing. And I remember this was out at Beachfront in Bloberg. That's where I currently reside. And we were like, let's go knock on every single business door here in the real estate sector and ask them for a job, you know. So we went to property.co.za, we went to Pam Golding, you know, we went to a whole bunch of different estate agents and kind of just introduced ourselves and said we would want to work there. There's like a canvassing for agents or whatever the case might be. And there was one specific owner. His name was Matthew Knight from Hazelmark, now called Knight Properties. And he was a young dude and, you know, it was kind of more inspiring to be working with this guy. It wasn't the most well-known company, you know, Knight Properties, Hazelmark. No one really knew them. Everyone knew the Pam Goldings and the property.co.za's, but we decided to start working with this guy. So my homie had dropped out of school then. He was full-time with them, and basically every day throughout the course of grade 11 into matric, I would, after school, you know, even if I'd finish rugby or straight after school, I'd take bus and then I'd go work as a canvassing for the agents. So that is kind of my intro into like corporate, you know, getting on the phone, talking to clients over the phone. And, you know, that is a good foundation. I didn't really make a lot of money doing it. But I got to understand the infrastructure of companies, you know, how the foundation of firms work, and obviously got to know a bit about property. So I still have a bit of passion about property today. And then I remember sitting in the office the one day, and my friend had his little tablets and he was busy trading. And I was like, what are you doing? You know, and, you know, that is kind of his grind. So I didn't really pay too much attention to it. I was still like, you know, on the phone trying to get some deals to pay like my life. And I remember the one day we were sitting outside having a coffee, and I was just like, dude, show me a little bit about what you're doing. And, you know, in trading, you kind of have these like light bulb moments that happen. And the moment you get the light bulb moment, you think, okay, cool, well, you know, this is it. I've got it, you know. And that was my first ever light bulb moment that I had. And I remember the first ever epiphany that I had for trading is understanding the fact that you had to look for a pattern, and patterns could be repeated over the time. And you obviously get different market cycles. And my first thing was understanding, you know, double tops and double bottoms or whatever. And I said, if I can identify these, I can make money. So that is my first kind of intro into trading. And then, you know, fast forward, you know, 4 or 5 years it took me before building consistency, which we'll get into now. That is my kind of intro into trading. So then obviously I finished matric, and I remember my first ever little investment, you know, I got from my dad. I basically had this demo account and I was working the demo account. This was 2018 September. I remember it was like it was yesterday. And my dad gave me a small investment. I think it was like 3,000 Rand or 4,000 Rand. And I worked at this account still trading news at that stage, so I have no idea about risk management, so I have no idea about what I'm doing at all. But, you know, just that beginner's luck, I managed to build this account. So I was trading NFP the one day. I made like $1,000 in front of my dad, not knowing that I was over leveraging and, you know, almost margin called my account with obliviously, but I made $1,000 in front of my dad, and he's like, no, this thing works. And I was like, this thing works. But made the beginner mistake, didn't withdraw the money. $1,000 wasn't enough. And I said, I don't want $1,000. I want 100,000. You know what I mean?
Yeah.
So at that stage, just before going into matric, I was like, well, this is clearly I'm going to be a millionaire before, I finish matric. I don't need to go study, whatever. And I managed to build that account from 3,000 Rand up to 60, 70,000 Rand. And all I needed to do, it was just before Christmas. I needed to pull the money. I would have had a beautiful Christmas. I would have got everybody presents, and just 70,000 Rand wasn't enough. As a youngster, you don't have a gauge on, what finances mean on a screen. It's just numbers. Sure. And I just remember sitting one day, and I was short yen. I'm not too sure exactly what it was, either UJ or GJ, whatever. And I remember that I was still taking signals from some dude who was also trading news, and he was long. So we all got long, and I was like, this is the trade. So, on MetaTrader, you can set a sell stop or a buy stop, and you can see exactly what your target is and how much it is.
Yeah.
So I was like, if I make money on this trade, I'll make like 100, 200K, and then that'll be chilling. Then I'll withdraw. And I entered the trade, and the news came out like flat, and the thing just started trickling lower and lower and lower. Now I've got some pretty big size on here. And I remember messaging the guy. I'm like, hey, do you think this thing's still going to go up? He's like, yo, just hold it. But now my stress is I couldn't even pay attention to the screen. So I went inside. I was like peeling potatoes just to kind of keep myself busy. And then basically what happened was I came back. I'm like, no, something's wrong. 10, 15 minutes later, came to my room. And that is my first intro into understanding what a margin call was. But basically what happened was my trades were closing on my MetaTrader. I'm like, no, what's happening? I thought my cat ran across my laptop or something. You know what I mean? And then I was like, no. So I messaged the broker. I realized, no, bro, I've been margin called. I only had so within like a span of 10 minutes, I'd blown like 60, 70 grand. And that was an absolute T-junction for me in my trading career.
But this is like matric.
Yeah, this is just before going to matric.
Oh, so just before going to matric.
End of grade 11, I was planning to be a millionaire in matric. And then basically what happened was I blew 70,000 before the start of school, and I was depressed for like 2 days. Yeah. I remember waking up that next day. I couldn't really sleep. I'd woke up the next day kind of hoping it was a dream. You know what I mean?
Yeah.
Open the phone. Oh, no, it's not a dream. So for 2 weeks, I obviously just put it on hold, just try to clear my mind a bit. And then started high school and kind of picked up the trading thing, slowly but surely from there again. And I realized it's either going to make me or break me. And, I fell in love with it. I had a passion for it. And I think without the passion, I wouldn't have stuck with it for the last 2, 3, 4 years before finding consistency. So, that is my kind of little background check. In terms of family-wise, I grew up in a middle-class household. Obviously I was the only child. A very rough background in terms of I understood a lot about substance abuse in the family, and obviously how it affected the relationship with the dynamic between my parents. My parents have been great parents, but not perfect. I don't think anyone's perfect. Yeah. But really had to find a foundation for myself. So that was my little upbringing.
Yeah. No, perfect. So wait, how long did it take you to actually build the account up to that 60, 70,000 Rand?
That was like a 2-3 week build there. Ooh. So I went from $200-$300, made $1,000 on a trade, won three, went into $3-4K. Then I slowly built it down to $3K again, and then from 3K it was at that stage it was $5,000. I remember the account being $5,000. So exchange rate then was about 70, 80K. It could be a bit more around now. But that was a 2-3 week span, and then lost it in 5-10 minutes, So I only had 2-3 months of demo experience before jumping onto life, but no education, no guidance. It was kind of like a young boy jumping into the ocean without really knowing what's going on. So that is a very breaking moment. So I don't think anyone at that age, you obviously get these big guys overseas like Maurice and whatever, dropping big funds. But for someone that didn't have a job, I knew what 70,000 Rand is worth to families. That's 2-3 months of salary. So to drop that as a youngster was definitely quite heartbreaking. But, it's these things in life that I think carries you forward. And, kind of builds purpose from within. And I think without that, it's very tricky, especially in the trading game, to not have a deep purpose from within. I think if you don't have a deep passion or purpose or true why, it's very hard to stick through the whole course of the journey, So that was a really foundational. As much as I hated myself for it then, questioned myself, questioned God, why me? But now I get to understand it. It's been some time, and it's kind of. It definitely wasn't a turning point in terms of finding consistency after that.
Okay.
I mean, after that was another 4.5, 5 years before really seeing any sort of consistency. And I can understand the struggle of going through that and then still not really seeing consistent profitability for 4 or 5 years. And you probably ask me, well, why would you stick with something? I don't think any sane person would stick with something that isn't working for 4 or 5 years. There's that saying.
Clearly not saying that.
Clearly not right in the head. And I think you have to have that characteristic somewhat if you wanna build something big. That was. There's that saying, I mean, if something doesn't work, if you keep, what is that saying? I think it's from Warren Buffett or something.
Or is it the insanity one?
If you're doing the same thing over and over and expecting a different results. It's basically insane, So that is my concept. I don't know if you want to break down how I found consistency.
No, it's fine. It's, I just want to understand, because right now, you're 17 at grade 11 right now, you go into matric.
Yeah.
Obviously, your mindset is a whole lot different because you just lost a lot of money and money you've never had before. I think that's the tricky part. But now I actually just want to get into the part where now, when does the learning begin? Like the proper learning begin?
Wow. Yeah, that's a good question. From there, I still didn't have the guidance and accountability, which is probably the most essential part with trading. Trading is a lot like, it's very practical. You can read a whole book on swimming, go and jump in the ocean, and you're going to drown immediately, So you need that guidance and accountability from the beginning. That for myself, I only got 4 or 5 years into the journey. So for the first 4 years, I was studying basically anything I could get my hands on. I had all the Astro Effects, the Falcon Effects courses. I remember still finding this documents on the one Telegram group with every single course out there. So, I learned everything from the different strategies to Bollinger Bands to RSIs, MACDs, moving averages, anything, market structure, ICT. I knew everything.
But you have access to all of this. Why is it not working?
And that's also a good question. And that's the question I was asking myself.
Yeah.
After 2-3 years, I was like, dude, I literally know everything. Why am I not making money? And there was only one piece. And then I started getting deep into the psychology side of things. And then I realized I can only be as good as or as profitable as my consistency from within and my own self, So then I started working on a lot of, self-development, Then I went from reading books, learning about trading strategy and technicals to more self-development, Then I was focusing on routine, sleep, discipline outside of my trading, And that's something that I still have a foundation on now is your discipline outside of trading reflects your discipline inside of your trading. And you can definitely see the correlation between the two. So I was also very curious as a youngster, being the only child, and grew up, pretty hard. So I went through the foundation of, the parties and the alcohol and the booze and the drugs and all that stuff and the women. And I kind of, I wouldn't say got lost, but that was definitely a hindrance of myself,
Sure.
So I was kind of holding myself back, So it was not information that I needed or that next gem that I found on YouTube to build consistency. It was really just myself. But then the true breakthrough, I would say, came from around 2022 into 2023, where I reached out to this one guy, BCFX, and he's still around now, Brandon Coleman. And he was definitely a turning point in my trading career. The reason being is we had a very similar strategy. We were both trading London session at the time. We were both sticking to one pair, trading GU. Sometimes we had odd gone GJ. But I remember this guy, he was probably till this day one of the best traders I know, and one of the few that are very real. He was open about having a live track record on my FX book, which most people can't show.
True.
And I remember watching this guy live. And when I mean this guy would come in 30, 40 minutes into London, take one position, make 2 times his risk, and then he would pull out and call it a day, And I would see this over and over and over. So eventually I Paid him. We became mates after that, but I paid him at that stage. And I think that was a big turning point, seeing trading done live in action. So I was watching basically over his shoulder. Now it's not just about information. I knew the basic foundation, but to see how his mindset worked, to see how his emotions fluctuate throughout session, to see his thought process, and to kind of watch someone do it live in action that knew what they were doing, that is a big turning point for me. So, I mean, fast forward there, I met another guy, James Bruce. He's also a very good friend of mine today, very good trader. He's working with big guys out in the US, lots of prop firm accounts. And I think the network, the guidance, and the accountability from people in first hand is probably the big breakthrough for myself. So learning information from YouTube does nothing but just build your knowledge, but knowledge isn't enough for a practical job. And my breakthrough is definitely building a network of real traders and then kind of replicating not what their strategy is, but how they live life. That is a big breakthrough for me. So as for myself, I've got a business partner too, Kale. We keep each other accountable. I'm not perfect. I'm not a robot. We have external factors in life that can hinder us from being at peak performance. It could be a breakup. It could be, arguments with your spouse, whatever the case might be. And you need that accountability. As good as you are, you need a good accountability partner in your trading. And for myself, I thought trading was that's one-on-one game where I could just sit at home and make money from my basements. But that wasn't the case. Then I started studying the guys from Wall Street, S&P Capital. These guys are making $2-3 million a year, and they've got coaches, they've got accountability partners, they've got psychology coaches. And I mean, it just puts it in perspective. These guys are making millions every single year, and they still have that guidance and accountability from other people. So it just shows you trading is very much a self-performance game, but it's done definitely as a team.
Sure.
So yeah.
Okay. So I just want to backtrack a little bit.
Sure.
So you basically spoke about, the other lifestyle that you lived that hindered you back, because I think so many guys tend to just overlook all of that, because I think it's just like, it's part of life. I need to go party. I need to go do that. I need to go do this. What actually shifted you to be like, okay, no, what made you see that?
Yeah, to realize this isn't working.
Yeah.
I think starting young and getting a grasp of the bigger outside world was a good advantage. So experiencing things early in my life, as much as I felt that it hindered me, I mean, people are still going through that now. 24 into 30, people just never learn. So for me to learn at a young age was good. But for myself, a good turning point was there were certain situations in life where I would be under the influence of substances and get myself in trouble. That was a big turning point for me. Caught myself getting into fights, caught myself having things robbed of me, phones stolen and stuff. So that was a turning point. And then at the second, I think the most important factor is trading. Trading has been that foundation for me to keep myself at peak performance and keep myself disciplined. So after 4 years of not really seeing any results in my trading, I realized, what am I going to do? Am I going to give this thing up that I've been doing for 4 or 5 years, call it a 100K loss, or am I going to really try and make this thing work? And the breakthrough for me was basically understanding that I knew everything I needed to do. I just needed to put it in action. And the only way I can put it into action consistently was through discipline. So I think the breakthrough was simply just the fact that for 4.5 years I was struggling. I wasn't making money. I didn't have any option, didn't go to university. I was like, either you're going to grow up and become the person that you see yourself as and become the person that can make consistent money, or it's just not going to work.
What's going on during that 4.5 years? Why? Because it's crazy. Because I just want to find out, because how are you sustaining yourself right now?
Yeah.
At this point, because you didn't go to varsity.
Yeah.
Are you hustling? What's going on?
Yeah, that's a good one. I think we didn't touch on that. So when I started out trading, I went through that whole foundation. I lost money 2-3 years down the line. I was still working at the agency, the real estate agency.
Oh, okay.
And then basically what happened was I had a fallout with my father at that stage, and basically we just couldn't look at each other's eyes, at that stage in my life. And I think that was also a big factor hindering myself, understanding all these negative thought processes and emotion, and kind of builds up a bit of trauma as a young man. But basically what happened was I got kicked out or / left. And, as much as my father wasn't the best father, I would say, he definitely set a good foundation. And, coming from substance abuse in terms of alcohol, when he was drunk, he was one person, when he was sober, another person, but he was always there for me. So basically what he said, Zach, we had a conversation one day, and he's like, what are we going to do? Do we need to send you to a course? And at that stage, we didn't have any guys here. We had like Bestex and whatever, which we are friends till this day. But we didn't have like big reputable guys to kind of buy a course from. And he's like, okay, cool. Well, how much money do you need in your trading account? So he gave me that question, and I was like, as a youngster, 100K. I just said 100K. But I mean, 100K now is nothing. You know what I mean? If you're making 1% on 100K, it's 1,000 Rand. If you're doing on 1 million, it's a different story.
So true.
So 100K is really nothing. But at that stage, I was like, I need 100K in my trading account. And he's like, okay, cool. Well, I definitely don't have 100K. But what I'm going to do is I'm going to go and find 100K from you. So basically, being good support and, kind of being there for me for this journey, which he really did support. He went to like 5 to 10 different friends, and he found each person. He says, back my son, and they trusted him. They didn't really trust me, but they trusted his word. He's a very respectable person. So, he managed to get 10K from one person, 10K from another guy, 20K. And next minute you knew I had 80, 100 grand to trade with. And I was building up somewhat consistency. I definitely wasn't a losing trader anymore.
Okay.
But I was like trying to go through that break-even phase. I would hold the 100K account. I'd push it up a bit, pay myself a little bit of money. And at that stage, I moved in with a dude for like 2-3 months. Graham, Shem, he was there for me. And I was basically on the borderline of living in my car. It was a pretty dark moment in my life. And Graham basically adopted me for 2-3 months. He would buy me some food and I'd spot him. And at that stage, I'm still working with BCFX. I'm still in his Discord. And it basically was like to the point where this trading thing needs to work, which is a bad mindset too, Yeah. And we'll get into that now. And then I was like, no, you know what? I need some sort of a little bit of income coming through here, because I think trading can grow money, but it definitely isn't there for a sustainable income.
Yeah.
So I went to I don't want to mention the company's name, but I went to this one place. I was like, if I had to get a job, it would be in the trading space. So I went to this company. There's like a young guy with my suit and tie, 80, and I knew everything about trading, and they loved me there, but they wanted me to be in the sales side. They didn't want me to be like a mentor or whatever.
Okay.
And I was there for like 1 or 2 days. And I remember this old guy walking into the office, and the guy's like, okay, cool, let me handle it. So I'm busy watching what they're doing. And this guy was like, oh, I've got my last 18, 20 grand left, and I need to send my kids to varsity, and I need this trading thing to work. And they sold him on an 18,000 Rand course. And the guy sitting there knew nothing about trading. Now, obviously I was a youngster, so I didn't have much respect. But these guys couldn't talk about anything. They were talking rubbish about institutional and financing and stuff. I was like, they basically just scammed this guy for 18,000 Rand, So that didn't sit well with me. So I left. And as I left after the second day, I got off a phone with my mate Cameron, and he was working at the sales job, Telconnect. He's like, come for an interview. So I went for an interview literally that day, got to the office with Jacques. And he gave me an opportunity to become a door knocker.
Door knocker, okay.
A door knocker, right? Yeah. So we were literally selling like business automation.
Yeah.
So like CCTVs, printers, telephones and stuff. But yeah, that was the worst job I've ever had. It was like totally degrading.
So what were you guys doing?
Yeah, dude. So we had this like psychopathic boss, and he would love me for saying it, Gareth.
Yeah.
And he would like literally take us through to Woodstock, a town, and you literally get kicked out the car. You have your little presenter, and a lot of the guys would work in pairs, so at least you got a homie to talk to. But for some reason, I just had to do it alone. So I would knock doors the whole day. Now you're hungry, tired, it's hot, you're sweating.
Just get to work.
You're getting rejected, like basically every door.
Sure.
It is a cutthroat industry. But I think that was a big, big foundation for who I am today.
Yeah.
Talking to business owners. Now I'm a youngster finishing school, and I'm basically getting CK docs, IDs, supporting docs, bank statements from business owners to get financing for this business equipment.
Okay.
So I was at this company for about 1.5 2 years before I went full-time trading, because I was still trading in between.
Okay.
And we signed a big deal, Umgalelo Africa, at that stage, and I made a nice bag. But before then, I was working on commission only. Then I managed to work myself up. I was getting like a 5K basic. And after some time, I was like, this isn't for me. I had to spread my wings. But at the same time, I was learning a lot from Jacques, my boss. He was a young guy too. So that was a good foundation for me. All the guys I worked for were young guys that I could kind of see myself as. And I just saw how he had like 5 reps on the road. He was doing nothing, chilling in the office, and he was just raking in deals. You know what I mean? I want to be this guy.
Yeah.
You know what I mean? And after 2 years, basically quit my job, and I was like, I've got a bit of savings, I've got a bit of funds. I managed to get a deal to work for this one prop firm at that stage, which was a nightmare. The prop firm got rugged literally the same day that I quit my job. Bro, I had a friend that basically we got into business.
Oh, yeah?
And I'm not going to mention the prop firm's name, but quit my job. And on the day that I had my graduation thing at the company, we were having a braai, some beers. My friend calls me, he's like, yo, bro, remember this so-and-so company that we used to work for? Mm-hmm. Do you know what corporate espionage is? I was like, no. He's like, no, dude, apparently this guy hasn't been paying people. I'm like, dude, I literally just quit my job. I'm not like you, staying with your mom. I've got bills and stuff to pay. I've got rents. I've got my car, this, that, the other. It's like I was banking on this, bro, and I just quit my job. And now you basically saying that I'm left with nothing. So I literally quit my job from being a full-time, at least in the trading space, because I was going to get prop firm accounts from this guy to work with.
Oh, yeah. And
then basically went into being unemployed again overnight, like this.
Gee.
Anyway, bro. So basically went from overnight, from working at the company, I built up somewhat of a savings. I told my parents I'm going full-time trading. I told my family, and they were super stoked and supportive about it. But now I have to make it work, bro. I threw myself in the deep end. I told my parents this is going to work. And then basically quit my job. The company that I was going to work for kind of rugged within the same day. And then I was like, nah, bro, now I'm alone, dude. I had like one trading account at that stage. I was funded, I think it was like a 25K account. And I was like, this thing needs to work, bro. And that's the worst position you ever want to be in as a trader.
Okay.
Is needing to trade to make money.
Yeah.
Now as a funded trader, I had the skill sets, but now I've got this limiting factor in my head where I need to trade to make money, and that's not where you want to be.
Yeah, yeah.
So my trading performance dropped, and I was like, no, I need income. So at that stage, I knew I had a skill set. I had good experience. I mean, I've been through, 5 years worth of this work now. Yeah. Let me try and package this work. I'm not going to be a course seller. That's not what I want to do. But I had dudes DMing me. They were like, yo, bro, Zach, I want to watch you do this. I was like, cool. I don't have a course, but jump on a live stream. I'm going to open up my charts. I'm going to give you a thought process. I'm going to put on an Excel. I'm going to put on a trade. You can see how I manage the position, how I hold my size, and that will be some value for you. Next minute, I knew I had a couple subscribers, and I was like, this is cool. I'm literally doing nothing. I'm talking while I'm on stream. I'm doing what I love.
Yeah.
And I built Nexus. That was a company called Nexus. And after about 4 or 5 months, I was still scraping through, making just a couple thousand from the trading, couple thousand of Nexus. And I was like, okay, cool. Well, this is kind of working. And I knew trading was where the money's at. So I was working to get more funding. Then I don't know if you know, but we had this HFT high frequency bot that came through. And this bot was passing funded accounts, and I was like, dude, this is a breakthrough, bro. And we had a homie that had the access to the spot, so he wouldn't sell it to us, but he would just we'd buy the accounts, give it to him, and he'd pass the accounts. And I was like, dude, this is a breakthrough, bro. My whole life I'm trying to pass fundeds, now I can do it like this. And it worked, bro. So got myself up to a pretty decent, substantial amount of funding. Had payouts come through here and there. Nexus was growing slowly. I wasn't a social media person. And then this HFT thing fell. Now all of a sudden they have this consistency rule and profit split rule. And they knew that everybody was getting these big payouts and big funding. Yeah. And they were like, no, we have to make it harder for these guys to get payouts. So the whole HFT thing kind of dropped. And at that stage, I was definitely at a plateau in my life. I full-time trader, I get to wake up and do what I want. You know, I was a young man finding purpose. It kind of felt like, you know, that movie Pursuit of Happiness.
Oh,
you know
yeah,
what I mean? It really felt like that. And the one day, Alex, a good friend of mine, invited me to the office at that stage. He was working for, markets.com or something. And I bumped in there, came through, and I met my business partner today, Kale. I was like, hey, bro, nice to meet you. You know, let's go for a surf sometime. We didn't even mention anything about business at that stage, but we just clicked like this, you know. And we met up, I think it was like a week later. We went for like a lunch or something, and I was just so impressed about what this guy's built, you know, and he was impressed about what I know and what I've built. And when it comes to a partnership, I've always been that, you know, solitude type of dude. I want to be alone, you know. And then I was like, no, maybe I need some help, you know. So where I needed help was, you know, definitely the social media reach. You know, Kale was blowing up on TikTok at that stage, you know, having lots of guys come through, and he had a course running at that stage. And I just knew everything about back-end infrastructure, you know, when it comes to building systems and email funnels and, you know, websites and payment gateways and stuff. And I'm like, yo, bro, let's synergize, you know what I mean? Everything you don't have, I have. Everything you have, I don't have. You know, let's try and build something. And we literally clicked from that day. And then we formed Legacy. Kale had his company Legacy Investments at that stage. Then we rebranded into Legacy Investment Solutions. We altered the logo. We built up a website. You know, we had payment gateway. He was funneling all his clients through. I was helping nurture the clients. We had back-end systems there, and we built like a full-on, you know, institution. You know, and fast forward a year later, 1 year, bought ourselves our dream cars and went to Thailand to travel and bought more funded accounts. So that is the breakthrough, you know. That's basically the story. And, you know, myself and Kel have been in business now for a year and a half, and we have tons of plans in the future, which I'm sure we'll chat about now.
No, perfect. I want to talk about the accountability partner thing, because, you know, I think even me, myself, I also have this perception that, you know, when it comes to trading, you know, it's you versus the market, you versus you, type thing like that. But now you mentioned the accountability partner thing, and you also hinted on like how, yes, it's a, I don't know how you put it. There's a way you put it, how it's the trading, it's a self thing, but you need community as well.
It's a self-development program.
Yeah,
for sure.
But you need community as well. So can you just get a little bit into account? Why does one need an accountability partner?
Yeah.
And how does it help?
Yeah, you guys ask good questions, eh? Yeah, I like it, bro. That's good stuff. You know, so the whole trading industry and the course thing, I think, is a complete scam. The reason being is you can package information, but once again, trading is swimming, bro. You can read a whole book, you can read everything. I went through 4 years of a course, of all the courses, and I didn't make money. So there's no ways on earth I'd be selling a course knowing it wouldn't work for people. And basically what we do at Legacy, we do have pre-recorded videos on strategy and stuff like that, and your foundational trading and frameworks and back-tested data to use. But that's just the foundation for you. The only way you're really going to build yourself as becoming a profitable trader or investor, or to be honest, anything in life, is a accountability partner. You know, so what we do is we cipher clients firstly. So before even onboarding new clients, we have to go through a Calendly meeting, you know, and we'll get to kind of screen the client first, if they're a good fit for us, if we're a good fit for you. Some of the criteria that we look for is, firstly, you need to have somewhat of an income. You know, you don't want to make the same mistake as me from the beginning. I've made all the mistakes, and that's why it took me so long. You need to have money. So the optimal client that we're looking for now is business owners, guys who inherited money, don't know what to do with it, guys who have surplus income, don't know what to do with it, guys who are working hard and want to buy back time, whatever the case might be. But money doesn't need to be the problem. So that's why trading takes people from 2 to 10. It doesn't get guys from 0 to 1. 0 to 1 you have to do yourself.
Sure.
So when it comes to accountability, what we do is we partner up individually with our traders. So it's a one-on-one partnership. So we cipher and we back every single trade you take. So we need to build a journal, because you can't improve what you don't measure. So from the bat, we set you up with good infrastructure on how exactly to journal your trades. And then myself and my team will review the trades and give you direct feedback on what you need. So it's not like watching a YouTube video, what do I do in this situation? Or I don't know what to do here. Or next minute, you know, you're in this hamster wheel and you're just making the same mistakes and you never get to see what you're doing wrong. You know, you think you're right, but you're not, you know. So you need someone to look at your systems and your trading from a higher perspective and kind of give you direct feedback and make the small refinements needed. So now, you know, we've got traders 6 to 8 months into their journey, you know, getting funded, getting payouts.
Yeah.
I wish I had that from my beginning. You know, I didn't have guys doing live streams or one-on-one accountability. You know, we had these guys selling courses and stuff, but till this day, I just went full deep on partnerships. After my partnership with Kale, I mean, I just realized how leverage is so important. So now I partner with every endeavor that I do. Gym, I got a good partner. My faith, you know, I've got good accountability partners. Business, I've got different partners. Friendship, I call it partners, you know what I mean? And I think one-on-one guidance and accountability is essential for traders and investors. And I think without it, you're just hopeless swimming in the middle of the ocean and you're going to drown at some stage.
Yeah.
You know?
You know, with this accountability partner thing, the reason why I'm asking it, because I also want to get an understanding also for the viewer at home.
Sure.
What if they in a different space, different environments, they can't get to Cape Town, they can't get to you guys.
Yeah.
What are some of the key bases of building an accountability partner relationship with someone? Maybe someone's at home, it's like, yeah, I've got that homie over there, he trades as well.
Yeah.
But they don't know where to start. Like, what
Sure.
does that whole relationship look like?
That's also a very good question. I mean, you can have an accountability partner, but you also don't want to be in the situation where it's like the blind leading the blind. You know,
Yes.
like I can have another homie who's totally unprofitable and we can be accountability partners and we can be unprofitable together. You know what I mean? But I think when you're looking for a good community and maybe a good team member or maybe just a good accountability partner, the first thing is he needs to be in the situation where you are at or where you currently want to be. So he's in that situation where you want to be. So you can replicate everything. Your accountability partnership doesn't mean we're on the same page, let's grow together. It's a partnership of you are where I need to be and you have the data and the track to prove it. So I'm going to pay you and I'm going to literally replicate every single thing that you do. So when you're looking for a good accountability partner, make sure you get things like live track records. You know, social media can be quite a cloudy place when it comes to transparency. Yeah. So good track record, good data. Make sure they have good, just reputation overall. You know, people, I think, flashing the cars and the money and stuff like that's not the main priority. As for myself and Kel, I mean, everything we do is data driven. So nothing we do is based on, everything we do is based on stats and data, you know. So we don't take a trade because this is how I feel. We take a trade based on, hey, data's shown us this for the last 6 months, you know, so we make a decision based upon that. And I think that's massive for people to have a look for. And I think the most important thing is find people you resonate with. You know, someone can be in the position where you want to be, but you need to know that there's a good synergy between you two, that you guys can build a relationship. So when we onboard new clients, we don't just look, hey, do you have money or not? I mean, we've turned down investors and we've turned down big clients for the simple fact that we need to see, are you actually cooperative, you know, like can we work as partners, you know, meaning if I say something, you do your part, if you say something, I do my part. So make sure that when you are looking for a team and accountability, it's someone that you can mix with and you can build a good, deep relationship with it. And when we onboard new people, we don't call them clients, it's team members, you know, it's partners. So we got a really tight relationship with each one of the clients that we bring through. And that's massive. So if you guys are out there and you're struggling to find good partners and good accountability teams, make sure that you can build a relationship with people, and because relationships are just as important. And obviously make sure they got good track record, you know.
You spoke about performance. And that's where you said it. You said high performance at some point. Yeah. How does one? What metrics are you using to measure performance, as well as why is performance so important to you?
That's a good question. So in trading, we always use this term peak performance.
Okay,
you know,
that's the term, peak performance.
Being at peak performance, optimal performance. So trading is very much a sport. as we've discussed. And to be at high performance in that sport, you need to take into account different factors. So, for example, health, sleep, nutrition. These are things that traders don't think about. They're only thinking about charts, technical analysis, RSI or ICT or whatever the case might be, but they're looking in the wrong area. So if you look at the top traders, we've got the biggest open chat room in South Africa. We've got 5,000-6,000 people in a chat room. And it's one thing for me to study the top traders, the top 1%, seeing what they do, but it's also something for me to study what the masses are doing and then kind of just do the opposite. So I've studied the masses, I've seen what they're doing, they're focusing on technicals. I've seen the top guys, they're focusing on being at optimal peak states to make the correct decisions. So health, nutrition, sleep, these are things that I've optimized in my life to make sure that I can make, one, the correct decision consistently. You can make the correct decision now, but who says in 4 months' time or 3 months' time or even tomorrow that you're going to be making the correct decision again? So if you're in my community, you guys will understand that at the end of the month, we're never basing ourselves based upon profits. We never ever judge ourselves based on P&L. We call it P&L. So at the end of the day, if you have a losing day, I'm not worried about whether you're green or red. I'm worried about, did you perform the way you should have? And then we can go down and we can see, okay, cool, we got daily report cards. Every single day, I can track my sleep. So sometimes we use things like Aura rings, or, you got those smart watches where you can track your REM sleep. And then you can become like a data collector for every single aspect in life, not just your trading, but on what days do I perform best? What days don't I perform? The days that I don't perform, I notice that I haven't got too much good sleep. Why didn't I get too much good sleep? Is it because I drank the night before? Then I can start alleviating all these factors that are hindering me from being at peak performance, So now I'm not focusing on strategy. I've already got the strategy thing down, but I'm focusing on alleviating the things that are holding me back from being at peak performance. Then I realized, okay, cool, well, I got a lot of internal work to do, because I've noticed a lot of the time I'm not at peak performance. At that stage, I was still smoking and drinking and stuff. So once I started working on myself, I realized that I was only looking at the charts when I felt comfortable enough from myself that I was willing to perform. And that's the beauty of the markets, that no one's forcing you to get to the desk and put on a trade. It's not like fighting or like a UFC fight where you're fighting on this day at that time. If you're not at peak performance, you're going to get slaughtered. Trading is like, if you're waking up and you feel like you're not at that right mind or something's bugging you, then don't look at the charts and don't put in a trade. So I've, one, optimized every single aspect of my life, health, nutrition, sleep, to make sure that my brain's at a functional state where I can handle pressure, I can focus for longer. I don't kind of have this ADHD mindset where I'm bouncing between things on social media, charts. So my focus is like at hyper state. And at the end of the day, you're fighting against banks, institutions, hedge funds, with the enrollment of AI into funds and stuff now at the moment. It's a death match. So if you're some retail trader out in Joburg, Cape Town, and you're drinking on the weekends, you're going to come in, you're going to get slaughtered by these guys that are at peak performance, So, yeah, peak performance is probably the first thing that I would start. So when we're onboarding new team members, I'm like, you guys are signing up for a self-development program now. I need to monitor your sleep, your health. Are you going to gym? If you can't be consistent in going to gym, how are you going to be consistent in executing a strategy, Even just making up your bed. The guy's like, oh, well, I've slept in the last 3 days, but you've told yourself you'd wake up 2 hours pre-market and you haven't done it. What makes you think you're going to make money consistently? So being consistent from within, and obviously keeping at peak performance, I think, are the two biggest things before guys should even look at technical analysis,
Yeah. Building a good portfolio, what goes into that?
That's a very good question too. I'm talking about long-term, short-term, overall.
Yeah, overall.
It's a good question. So basically how I started out in FX, like most guys, trading GJ, GU, trading more of the European markets. And then I've been through plenty different cycles now. 2018, COVID. I've seen the flash crash with yen. I've seen oil go to zero. I've seen, obviously now with the tariffs and price pulling back heavy and the stock market selling off big time. So as for myself, started on FX. I had a small introduction in 2018. I was staying at a guest house and we had a guy who was staying there and he was mining Bitcoin. And I remember at that stage, Bitcoin was worth like 4,000 Rand a coin, and he had like 40 of them, and he was sitting on like a good chunk of cash. But we didn't know anything about that thing at that stage in 2018. That is still like way before. And then I remember he left, and I obviously allocated quite a little bit into it, and went up from 4,000 to like 100K, then from 100K to 150 into 250. I didn't do it perfectly. I allocated quite well early, and then allocated too heavy at the top, and then obviously price pulled back, and I didn't manage to cash out what I should have. But it was a good intro into crypto. So went from FX to more insights into crypto. Then I went into, I'm not too sure if you remember Steinhoff. Steinhoff was a South African company that basically had the, with Marcus Jooste, they had that big internal conflict. And we allocated funds to Steinhoff at the lows. That was my kind of introduction into stocks. So I went from FX to a bit of crypto to individual stocks, and then from individual stocks, moving into basket companies like DAX, which is something I still day trade till this day, and then obviously the S&P 500 and NASDAQ and stuff. So to answer your question, I think what goes into a good portfolio, I think you have to look at a couple things first. Obviously, it'll be, what is your risk appetite? What is your time horizon? What is your goals? What is your needs? And what are your liquidity needs? A good investment could be allocating money to a 10-year money market fund. But if you're buying a house in the next 2 years, it's going to be totally against your goals and needs. So you need to understand those 4 things first. Then from there, you can basically kind of tailor make a portfolio for yourself. I think a good portfolio for myself personally, I'm a little bit more risk averse, so I'm allocated heavier towards short-term day trading. So I'll be looking at GJ, GU, DAX on the short-term side of things. In terms of long-term, individual stocks, Tesla, Amazon, Facebook, is pretty good. Some of the large cap tech stocks are doing quite well. And then obviously long-term S&P 500 is quite good. So in terms of like portfolio optimization, you have to take into account like Sharpe ratio. Everybody's like, okay, well, if I can make 16% versus something that makes 12%, but that 16% has 90% volatility versus the 12% that has 20% volatility, everybody's going to flock to the 16% because they think it's better, but it's not. Actually, the 12% with less volatility is better. So good diversification is definitely an art. And the way it works is you allocate funds into a specific sector that can balance out risk in a different sector. So if one thing does well, it obviously you want to, and one thing doesn't do too well, you don't want that one that doesn't do too well taking up majority of your portfolio, and it damages your whole portfolio. Likewise with rebalancing. So you get diversification, optimization, then you get rebalancing. When something does do well, now your portfolio isn't allocated correctly. Say, for example, you're 50% Tesla, 50% Microsoft. Microsoft goes up to, now it's weighting 70% of your portfolio. So now you're not at that original 50-50. So you need to then pull that 20% out and split it so that they're both at, the same allocation that you had from the beginning. So I think a good portfolio is definitely tailor-made to each person based on their needs and their risk appetite, whatever the case might be. As for myself personally, I can't give financial advice for other guys. For myself, obviously more risk averse on the day trading side of things. That takes up majority of my portfolio. I've got my private capital, and then I've got prop firm too. And I've got a few private investors that obviously copy on my account through the infrastructure of copy trading, right? Which is something we can get into. Then from there, I think long-term for myself, every single month, I'm dollar cost averaging into the S&P 500 constantly. So every single month, whether it's going up or down, I'm putting a small piece into the S&P 500. If you look at the charts over the last 20, 30, 40, 50 years, the thing's really doing well. It's the top 500 companies, and I'm backing on the top 500 companies. So basically what it means is Tesla does bad, even though it's part of the S&P 500, the S&P 500 can still, it's weighted based on all the companies' performance. Likewise, NASDAQ, top 100 companies. So I think everybody now should be investing somewhat, even if it's 100, 200 Rand per month, is the S&P 500. That's definitely the safer one that I think can yield at least a bit more than the banks. Then if you want to look at a little bit more risk appetite, you can say, okay, cool, well now I can look at more individual stocks. Okay, cool, well what are the more large cap stocks, above a couple 100 million market cap? Tesla, Amazon, Facebook, Microsoft, MicroStrategy, some of these big companies. start out there. You know, they're still fairly reputable. For them to go to zero overnight is going to be a nightmare, and I just don't see it happening anytime soon. Big established companies with big cash flow, lots of clientele. It's a good place to start too. Then from there, if you want a little bit more risk appetite, you can start going into like what we call thematic plays, which is looking at certain trends that are following. For example, AI stocks or solar. You know, solar stocks were doing well when, you know, the load shedding thing was in play. You know, so looking at more trend narratives based upon that, and then we can start the diversification process again. Then you can go from there into, say, for example, crypto. Now, crypto is a whole broad market spectrum. You know, you can go from layer 1s to layer 2s, and you can go from mining to staking to yield farming, whatever the case might be. Starting out basic, I think the big layer 1s would probably be the more important, your BTC or ETH. And then looking for more risk appetite, once again, you can go into, I would stick away from like the meme coin thing. If you want to like be a degen, like some of these guys making some money trading meme coins, cool. But for good portfolio optimization, I'd probably go around BTC, ETH. And then from there, I'd look into the things like your Sol and your smaller type layer 2 cryptos, your Matics, whatever the case might be, even Litecoin, something that I kind of fancy. So then you can start looking at, okay, cool. Well, that's more of the risk on plays. You know, I would say individual stocks, crypto. Then you can look at more conservative allocations. You know, when you're building a portfolio, you look at things like government bonds, real estate, REITs, REITs, which is basically real estate investment trusts that you can have no credit check. You can have no major deposit for, check this out, you can have no major deposit for a property, but you can buy REITs, which is basically a small ETF into a rental property, and then you can get a small allocation, a little dividend every single month from that rental of a development, whatever. So that's more obviously conservative. Government bonds, REITs, obviously real estate's a very good investment. And there's different avenues, once again, in real estate. You know, you can do rental properties, you can do fix and flip developments. As for myself, I think fix and flip would be more of my allocation because I'm more risk on. I'm young. You know, I don't want to wait 20 years for a property to get paid off. I'd rather buy a property 30, 40% under market value in a good area, maybe schools, malls in the area. I can put maybe 200 grand into it, and I can sell it at, you know, I can buy it 30, 40% ARV, which is after repair value, and then I can sell it at market value, and I can make a nice chunk, pull that out, and I can reinvest it into another property. In real estate, which is, sorry for digressing too much, but real estate is a good thing too sometimes, or the majority don't know, is that in real estate you get something called refinancing. So most people only get to their first property. They'll buy a property and they'll stick on that for the rest of their lives. But they don't know is that a property obviously appreciates in value. There's only a specific amount of land on this earth, but the population of people are increasing. So it's basic supply and demand. Property will always be increasing in value. So people don't understand that there's something called refinancing. If you buy a property at 2 million, in 5 years' time, it's worth 2.3 million, 2.4, 2.5. You can actually cash out that equity inside the property, and you can use that as a collateral for the next property. Considering you're going to put a tenant in there, have the tenant pay the bond, now you're sitting on 2 properties, and then it just becomes a snowball effect. You know, so property is definitely a good one. To answer your question, what goes into a good portfolio? Once again, you have to answer what is your risk appetite, your time horizon, your liquidity needs, and your risk appetite. So yeah, I think understanding diversification is obviously a good blend, but I think having a nice blend of something between S&P 500 individual stocks is probably the best place to start, for sure.
How has your relationship with money evolved over the years?
That's a good one too. Wow. That's a deep one too. I think I'm still in that evolution phase of it. You know, I'm getting to understand it, but that's so important when you want to make money. People are always like, I want to make this certain amount, but they don't understand what is money. How is money created? People don't understand that money is being printed every single day. So my relationship was from the beginning that there's a scarcity. I thought, okay, well, now I need to clip the coupons. You know, I learned this from my family as I clip the coupons, save that, get that little discount code, pick up the 2 rand when it's on the floor type thing. Then I began to realize that money is totally abundant. Totally abundant. There's everything in life costs money, and everything in life considers money, and it's being printed every single day. So the US dollar is being printed trillions daily. So I think my relationship changed from understanding the scarcity part to then going into the abundant mindset, understanding that there's no shortage of money. I just need to build myself up to a point where I can offer value. And naturally, when you're a man of value, you exchange your time for money. So my relationships changed where money requires a lot of respect. You need to understand money, and you need to have those two factors in play first before you go on your ventures to becoming a millionaire. A lot of these guys, they don't understand these two factors. They hit a good run, make a couple million, and then they end up back to square one because they don't have respect about money or they don't understand it. So yeah, my relationship dynamics definitely altered to a point where I went from scarcity to an abundant mindset. And I went to that abundant mindset before I even started making money, which is quite cool, So once I started moving to the abundant mindset, I realized there's tons of money out here. I just need to become a man of value to exchange my time for it. And that was definitely a big breakthrough, for sure.
What are some of the habits of a highly successful investor? This is probably an easy one for you.
Yeah.
I had to ask it.
Yeah, sure. I think good habits is definitely health optimization from the beginning. I've just never met high net worth, like being involved CEOs, being involved with a team actually working. I'm not talking about inheritance or whatever, but big CEOs is definitely, they're full of energy, constantly gymming, because they realize their body's a vehicle and they need to make optimal decisions and they need that high energy. So definitely being of high energy. I think good sleep is for sure. You don't see big guys, you have let your hair down sometime every other month or so, but good routine, good sleep, definitely daily structure in your day. That's something I've been optimizing quite a bit too. So making sure that I have these specific work blocks and that I can optimize my focus inside those work blocks to a point of high productivity. So every single day, making sure that my hours are planned out, planning my day, health optimization, good routine, and just focusing on diets and trying to. A lot of people think like, what do you do to make money? But it's also about what do you don't do. Everybody's trying to add new things into their lifestyle to try and increase their chances of success. But I think people need to focus on what to remove from their lifestyle. Stop the drinking, stop the smoking, and you're already like 80-90% there, in my opinion.
Yeah. Self-development. Let's get into that because I can see it's quite a big thing in your life.
Yeah.
What is self-development and how have you actually improved in self-development? What have you introduced in your self-development plan over the years?
Yeah, I think it's a foundational purpose for our existence on this earth. I think a lot of the time and majority of the people that go through life never really fully attaining who their true core self is. And for myself, I've had many spiritual breakthroughs and I've had many financial breakthroughs. But on the spiritual side of things, I realized that my body is a God-given gift. And just us having existence on this earth is already like a minute chance. So I just got to this mindset where I want to become like an absolute weapon in business. And I want to figure out who my real, true core self and purpose is. And that comes from staying away from man-made destructive desires that, people chase these days, so the alcohol and the vaping and, the smoking and things like that. I think that holds us from our true purpose. Also, I just became addicted to bettering myself. As I said, the biggest breakthrough was realizing after 5 years that it wasn't the strategy in my trading that made money. This homie wants to listen. Come sit on my shoulder and sit. It wasn't the strategy that made me money. It was just having that breakthrough that I'm the only person that's holding me back from anything. And I'm sure even for yourself, you guys have built up a good foundation here. And you went through different phases of, cool, we need partners, cool, we need infrastructure. But this business isn't going to grow as far as I grow. Yeah. My relationships aren't going to grow as far as I grow.
Yeah.
I'm not going to attract the best women that I need in my life if I'm not growing, So I think in just every aspect of life, if you can just always be focusing on bettering yourself, you can't be losing.
Yeah.
You know what I mean? can be put into a dark place. You can have these financial troubles. You can have breakups. You can have the heartbreaks and disappointments. But if you're constantly just making sure that you're becoming better every single day, I feel like you're winning anyway.
Risk management. What is it that a lot of people have wrong about risk management?
Yeah, so I think when people come into trading, they're obviously definitely risk averse in a sense that, they're focusing on risk a bit more. And that's definitely a motto that we have, is focusing on downside as opposed to upside returns. If you go back to 2008, pre-market crash, a lot of the investors and, a lot of the hedge funds and stuff could actually optimize for high returns. But then after the market crash, limited volatility got questioned. And a lot of the investors actually pushed these funds to protect them against downside risk rather than to actually make their money. So I think times have changed a lot. That's why a lot of these institutions and funds of funds and family offices, whatever the case might be, they don't optimize for these high yielding returns anymore. And for the main fact that people need to, because of the 2008 crash, they're focusing on more protecting them against downside risk rather than upside returns. So I think risk is something that you need to understand, then risk appetite. And that's why you go into like a risk profiling section in our program where we get to understand what is your understanding of risk. Have you ever actually put risk on before? Have you been through a market crash? How have you acted? What is your reactive emotional states that you went through when experiencing risk? So I think risk management in itself is still fairly easy. If you have a foundation of, what makes you money, you understand that to make more money in trading doesn't mean more risk. It just means more capital. So a lot of the guys, they're trying to allocate 2,000-3,000 Rand on an account and flip it, make 100-200% on a trade. Whereas to make that same amount, you can do it risking 1%, 2% on a funded account. So definitely optimizing for a lot more capital as opposed to risk, and understanding that risk is definitely, your friend. It needs to be a friend. It needs to be respected. It needs to be understood, if I may say that. So I'm definitely always focusing on becoming risk averse, protecting myself against downside risk, definitely focusing on building risk transparency towards clients, having them understand what risk really means, getting them to understand their own risk appetites, which is highly important. But to optimize for higher yields and returns these days, you need to know how to balance risk. So risk is definitely something that you don't want to move away from, but it's something that you want to have on your side, and you want to maintain it to a point where you can make higher yields or asymmetric returns, by mitigating risk while optimizing for higher yields. So risk is definitely probably a main foundation for any trader, investor, and even in your life, you need to be able to take risk. You need to know when to step out the box, whether it be a job, whether it be an opportunity, whether it be a partnership, whatever the case might be. You need to know how to keep risk on your side. You don't want to have an asymmetric idea where there's too much risk for a little bit of reward. It's definitely a massive account that you have to take into when trading or running a business, for sure.
Yeah. Prop firms. Why are so many people not finding any success with prop firms?
Yeah, prop firms are dangerous. The reason being is, we can look at the infrastructure of prop firms. A lot of these prop firms are ragging, or, they don't last very long. The reason being is the way these prop firms make money. It's B-book. It's not real institutional funds that are backing you, at least majority of them. They are running on, now they call simulated funds. So basically you could be trading on a demo basically, and you can get your payouts, and they're paying you out based on their holding liquidity, and they're paying you out based on the challenges and the fees that they charge, so the payouts can be very real for sure. I think the reason why people don't succeed, or majority don't succeed, the same like most don't succeed in trading, is one, they don't have a good foundation, two, they don't understand the risk management side, they don't have guidance and accountability. But in terms of passing a funded challenge, a lot of the guys take each challenge too personally. In my case, they take their last bit of savings and they'll throw it in a prop firm account. Once again, you're operating from a scarcity mindset, not an abundant mindset. So the way I kind of approach funded accounts is I would rather buy maybe 3-4 challenges, maybe drop 2-3 challenges, pass one, get a payout, and then that payout still covers for my 2-3 challenges. So I had this conversation with a good mate of mine, James Bruce, the other day, and I said, well, how do you get so much funded accounts? And he's like, well, I'm buying a lot more than you are, and I'm failing a lot more than you are, which is very true. So the way you do it is you buy 5 prop firm accounts, you pass 2, you fail 3. Now you're a bad trader? No, because you've already got 2 payouts waiting, and that payout's going to cover for 5 accounts. You know what I mean? So the way I would approach funded accounts is to kind of go, I would say, medium to higher risk to pass the account. Once again, it's a demo account. People are treating a funded account like a live account, or at least a challenge already. So they'll try and attain the 10% profit margin, which is quite high. To make 10% in a month or even 2 months is a high return. You know what I mean? If you're making 2-3% a month, I mean, you're doing really good as a day trader. So I think the high expectation of, if I don't reach 10%, I'm a bad trader mindset hinders good traders from becoming funded. And the way to approach that is focus on buying more accounts. And the same way you have a losing trade, you will lose a funded account. It's just part of the game. You're never going to buy funded accounts past them. If you fail a funded account, doesn't mean you're a bad trader. At the end of the day, it's like gold just to get paid. So focusing on getting paid and not focusing on being the perfect trader. Buy yourself 3-4 funded accounts, higher risk them, pass the account in 2-3-4 weeks. And now a lot of the prop firms, they say, well, no time limit. Well, that's a dangerous place to be too. I mean, you don't want to be sitting on a demo challenge account for 3-4 months not making money. Fail the account, buy the next one. Fail the account, buy the next one. High risk it, pass the account. Once it's passed, you can then put it to your lower risk allocation. Instead of risking now 2-3% to pass it, now you can go back to risking your 0.5-1% per trade. And that can be your conservative allocation, part of your portfolio. So if you still day trading and you feel like you're somewhat consistent and you're struggling to fail funded accounts, focus on maybe purchasing a lot more, focusing on the business side of purchasing, failing and passing as if you'll win and lose a trade. And then once you do get funded, put that into your lower risk pot, get payouts from the lower risk pot, then understand how to, people also think a prop firm is the be all end all in a trader's business. I would say it's just the start, so we always don't put prop firms on a pedestal. Understand that the first prop firm you get is a foundation for you to continue to make money, get payouts. Once you get payouts, it's a lot about what you're doing with money, how you manage money. That is a big breakthrough for me too. I find that making money is still fairly easy. It's keeping money and managing money. So what do you do when you get your first payout? Do you go to the club? Do you buy?
You go celebrate.
Go celebrate, blow it all, or thinking more long term, reinvesting.
Yeah.
Getting a payout, taking that payout, reinvesting it back into your portfolio once again, splitting that risk up, obviously paying yourself. Make sure you do pay yourself. You go and enjoy it. Go out for coffee, put in some petrol, take a drive, whatever the case might be. Understand how it is to pay yourself, but constantly just reinvesting those earnings until you get to a point where you can become full-time. A lot of the guys are 25K funded accounts, it's R500,000, but it's not enough to be a full-time guy. You know what I mean? You need to get to that point if you can maybe manage 4 25K funded accounts. So now what you do is once you've funded of your first funded account, focus on getting your next funded account first before you even start trading the first one. The reason being is what we do is we're trading multiple funded accounts on different days. So at the moment, I've got 4 or 5 funded accounts. I've got my private cap linked to it. So I'll trade each funded account on a different day. So say, for example, I've got 4 25Ks. Monday, I'll take a small loss, mitigated quickly, managed it quickly, perfect. Tuesday, I'll take a small loss on a new account, managed it perfect, mitigated risk perfectly, perfect. Wednesday, I'll take a small loss again, mitigated my risk, everything's perfect. But now, instead of being down 3% on one account, now I'm actually only down 1% just on 3 different accounts. So I've split my risk up. Now, on Thursday, I can come in, make 2-3% on a trade, and now I'm getting a payout. You know what I mean? So now I'm getting paid. Whereas if you're trading on one account, you would have been now either back to break even or you would have tried to recover drawdown. So I think as a day trader, I try and stay away from the drawdown place. You don't want to be operating, being down 10, 15% on your accounts. It's not a place where you want to be. It's not a place where peak performance is optimal.
Have you been stuck in a drawdown before?
Yeah, I've been through a couple drawdown periods in my life, and even now I can still go through light drawdowns. But good traders are people that know how to manage drawdown. They've been there before. You know, you don't want to be a good trader for 3-4 months, hit a small losing streak, and all of a sudden you can't recover for 6 months. You know, so understanding drawdown is definitely something that every trader will go through, and you need to know how to get out of it. But to stay away from it as far as possible, I would suggest splitting your risk between multiple accounts, always trading different accounts on different days. Once you push a prop firm up 2-3%, just make sure you get the payouts. While you're waiting for your payouts, you can work the other accounts, you know, but it keeps you away from drawdown for sure.
I think a lot of people struggle with that adjustment from going to, like, you speak about, you talking about the 10%, right? To a majority of prop firms, it's 10% to pass the initial challenges and then to get to the funded phase. And then when you get to the funded phase, obviously you withdraw what you make.
Sure.
Most of the time, you know. But I think a lot of people, they never really adjust themselves from the 10% down to understanding that you don't have to make 10% anymore during the funded phase.
Very true.
Yeah.
Very true. I think the whole challenge thing either boosts confidence too much. You know, now that you're making 10% to pass the challenge, you think you're going to be making 10% before you get your first payout. And then also it hinders you from success because you're like, hey, 10% is a lot. If I don't get 10%, am I a shitty trader? It's not the case. So I do think prop firms, you need to understand their business model.
Yeah.
As much as you need to understand your own business model, you need to understand their business model. If you're in a partnership with a prop firm or multiple prop firms, I would suggest have different prop firms, different accounts, even different accounts for different reasons. You know, that all links back to the asset allocation and the diversification and the risk management we spoke about. But yeah, I think, guys, 2-3% per month, if you can do that, you're not going broke. You know, me and myself, James, we always say, if you can make 2% a month, you're not going to be poor for sure. You know, 2 times 12, 24%. And 24% is total alpha for firms. You know what I mean? So if you can do even more than 10% a day, you're beating the bank. More than 15, 16, you're beating the S&P. And that's essentially our goal. Our goal is to attain alpha while focusing on mitigating beta, which is volatility, as we call it, in asset management. And yeah, I think 20-30% per year is massive. You know, it's not massive on 1,000 Rand accounts, but if you're trading a couple million, I mean, that's all you need for sure. Literally. Yeah.
Have you, what is the biggest loss you've kind of taken? And it doesn't have to be a monetary, like your biggest lost 10 million. No, just a loss where you look at it and like, no, that loss actually really hits me.
Yeah, I think about it till this day. You know, besides the 70, 80 grand that I dropped, I think a big loss for myself was allocating towards BTC in 2018 and then kind of cashing out too early and allocating hard again at the highs. I still worked it out the other day. I mean, I did an allocation for my dad, funny enough. You know, he wanted an allocation now, and we bought BTC even at like 100. You know, it went to 100, now went to 106, and just that small margin with leverage, I mean, you can make some money. But I went back on his accounts when we bought in 2018, and I was like, if we had held onto ETH, we would have been upsized return of like something like 1,200%.
Sure.
So I mean, that 80, 95 that we allocated, I mean, I would have been a millionaire for sure.
Yeah.
Earlier, you know, a lot earlier. So I think I still bite myself onto this day. I'm like, I was in the perfect situation. I met a guy at a guest house who was trading BTC.
Yeah.
You know, he had 40 of them. I'm still in touch with him today. He called me on a boat the other day sitting in Malta. You know, so he definitely held, and he had 40 BTC, so he made that cash. But I was just, till this day, a little bit hard on myself as to like why I wasn't involved. It is part of the lesson, you know, but I should have gone heavier when the opportunity was there. I was young. I didn't quite understand it. And I think that was a massive knock. Maybe just unrealized gains, you know, gains that I didn't actually lose out of my bank necessarily, but missing out on 1,000, 2,000% run was tough pill to swallow for sure.
Yeah. No, completely.
Tough pull, bro.
No, Zach, thank you very much.
Yeah, champ. Bro.
Appreciate the conversation. Are there any closing remarks you have on your end?
Yeah, I think moving forward, I would like to maybe meet out you guys, come up to Joburg. You know, maybe we can run like a part 2. You know, there's still a lot to chat about. I think understanding the integration of AI, how we're utilizing it in our funds, how we're utilizing it in our business is massive. If you guys do want to follow me, obviously Zack Rens on Instagram, YouTube. I'm sure you can just, you'll link it down below.
100%.
And yeah, hopefully I can be on for part 2 sometime.
All right. No, thank you very much. Thank
You're
you very
champion,
much.
bro.
All right.
Thanks for having me.
All right. Thank you guys so much for watching. This was another episode of Market Masters with myself, Ngobile Tambani. I will see you guys same time next week. And we're out.